Welcome to the HMO Success Podcast. I'm your host, Wendy Whitaker-Large, and I'm here to help you create a profitable HMO portfolio. Whether you're a brand new investor or you've been at it for a number of years, my podcast is here to help you make the most from your business, whether that is starting up, scaling, or systemizing. Please hit the subscribe button to make sure you never miss an episode. And if you've got an awe-inspiring project, an inspirational investing story, or a unique approach to HMOs, I'd love to hear from you. In today's episode, I want to start looking at some of the drivers, the factors that might influence whether or not you expand your property portfolio in 2024, sell up your property portfolio in 2024, or just freeze and hold for the year. What are those key factors which affect the housing market? Now, this is something that I often discuss with my mentoring clients because I think that having an understanding of the wider market is really valuable when it comes to property. Just looking at property in a kind of narrow focus doesn't give us the whole big picture. And actually, this is one of the things that I've really enjoyed about being a property investor over the last 25 years, is learning about the macro economy and understanding how macro really affects housing and actually vice versa. So when we just take a moment to have a think about what do you already know and understand about those macro drivers in the economy that affect housing and specifically HMOs, what do you think of? Is it interest rates? Well, we know this week that the Bank of England held interest rates at 5.25%, which is not particularly good news if you're an investor because it signals that interest rates are going to carry on at that level for a little while longer. Having said that, that's actually a much more normal figure for interest rates to be at historically. Prior to 2008, most of the years preceding that, interest rates were around 3 to 7%. So 5 sits, beautifully in the middle of that. But yes, certainly interest rates is a really big factor. You might also be thinking about inflation. That's another big factor in housing. And we know that eventually asset prices do always increase in line with inflation, even though there might not be an immediately direct correlation. So that's why we, of course, say that long-term wealth is always built by investing in assets that either beat inflation or grow in line with inflation, because they are effectively the curve, the growth curve is effectively alongside the devaluation of the currency, which is really all that inflation actually is. It's just the currency being devalued. There's no extra value that's being produced. It's just simply that the currency is going down in value. So typically, if you ask a property investor, those are two of the key factors, the key drivers that they would quote as being important to whether or not to invest in property or why to invest in property. But I'd like to also just introduce you to a few more today. And I'm sure that you will be very, very well aware of many of them that I'm going to discuss. But I think it's worth just pointing them out because maybe in 2024, one of the things that you could commit to is being more educated when it comes to property. I mean, we can all do that, can't we? Even I can do that. I've got lots to learn. And I think education is really key. So I think one of the factors that I'd like to talk about today is immigration. By the way, I have produced some slides for today's podcast and I will upload them onto the show notes or give a link so that you can download them. So if you want to see some of the statistics that I'm referring to, you can download the slides and have a look at them. Immigration has, of course, grown massively over the last 10 years, despite David Cameron's pledge to allow immigration, but at a very sustained level. Well, it hasn't really been sustained. And when we look at the figures for non-EU immigration to the UK, it has hugely risen in the last couple of years. I think the current number of of immigrants coming to the UK is 700,000 people. Now, that is a massive amount of new people coming into the UK. The population of Stoke-on-Trent is about 220,000 people. So you're talking about 3 times the size of Stoke-on-Trent coming into the UK every year. Now, while I love the people of Stoke-on-Trent, and I especially love their oatcakes, I can see that having 3 times the size of Stoke-on-Trent arriving in the UK each and every year is not only a logistical nightmare, but also it is an infrastructure nightmare, because all the services that are there then geared up to providing for people who are not of UK national descent have challenges. And of course, we've seen this in education, we've seen this in social care and welfare, and also in the health service. Now, don't get me wrong, I'm not an anti-immigration person. I actually think that immigration is great for the UK, but I think that these numbers are unsustainable. So I think we've really got to think hard about how this affects housing. And of course, because HMOs are the cheapest generally form of housing, apart from social housing, where there's just a benefits exchange there rather than any earned income being exchanged. But for people who are working and can't get a mortgage and maybe are sending money home to family and friends, or are saving up for their own deposit for a property when they can buy, HMOs offer one of the best forms of housing. In fact, the other day I was talking to our team and saying to them, what proportion of people do we think we're housing who are not UK nationals? And we know that because we have to do the right to rent information. And it's about 70%. So we have a lot of people who are being housed by us in Crewe and in Stoke, who are from non-UK background. And that has its own challenges as well in terms of integration into the community, learning how to live in a shared house, understanding how the culture of that shared house works, and the responsibilities that come alongside that. So yeah, there's a bit of training and education that has to go on with some of those tenants. But generally they settle in, they do very well, and they integrate very, very well. But I would imagine that in other parts of the UK, the pressure is still immense. And in fact, I'm going to talk a little bit about some of those factors in terms of those influx flows of immigrants and the demand on the housing sector in a little while. Another report that I like to look at occasionally is the RICS report. So this is the Royal Institute of Chartered Surveyors, and they write a report every month. And it's very interesting because not only do they provide useful graphs about things like stock levels in housing, housing levels, housing sales levels, regional average sales, regional average stock per surveyor. There's also some commentary there. So if you're looking to be, you're interested in stock levels, both in terms of rental and in terms of sales, the RICS survey, the RICS report is a very, very useful one to have a look at. One of the things that shouted out at me loud and clear when I looked at this report was the drop in national average sales per surveyor over the last 3 months. You can see from that the actual volume of property on the market has massively reduced over the last couple of years. And it hasn't just been reducing since COVID. Actually, numbers were falling even since 2008. So we've seen fewer properties actually being transacted since 2008, which is, again, very, very interesting. Despite rising levels of mortgage payments or mortgage approvals, what we haven't seen is corresponding levels of sales. Partly this is, of course, due to the lack of new build, and new build housing coming onto the market, of course, increases those sales. And the lack of new build has meant that simply there are not the properties out there to be transacted. It also means that people are staying put for longer. They're not choosing to move. They're not choosing to sell up and to maybe move up the housing ladder, as maybe happened 20 or 30 years ago. We can also see that the actual tenant demand, as I'm sure you're very aware of already, has also hugely gone up. So on the letting side, from the RICS survey, they track the demand for lettings, and national tenant demand obviously soared last year. In fact, it's coming down very, very slightly at the moment, and when we look at the spare room figures, that correlates quite closely. But it doesn't mean to say that the pressure is off the market. It certainly isn't. Because the other side of the coin of demand is, of course, supply. And one of the things that the RIC survey points out very clearly is that regional new landlord instructions over the last 3 months are significantly down. In fact, apparently it's only in the north and the northwest where there is a slight increase in new landlord instructions. Now, when they say new landlord instructions, they don't mean somebody who's a new landlord. They mean a new instruction from a landlord. So this doesn't mean to say, suddenly there's a new property that has been created or a new property that's been bought and is turning into a rental property. This is often a property that's coming back on the market because somebody has moved out, or it could be a new property that's coming onto the market for the first time. But quite often, these new instructions are just, a property that's been rented, the tenant's moved, and now it comes back onto the market. So it doesn't necessarily represent additional new stock in the housing sector. It's just a regurgitation of the same stock. But the numbers are shocking. Down by 60% in Scotland, down by 40% in the West Midlands, down by 30% in Yorkshire and Humber and the South East, down by 20% in Wales, London, East Anglia, and the South West. So what does that do when not only do we have huge increases in demand for rental property, but we also have a reduction in the supply? Well, of course, we know what happens. Prices go up. It's the very basics of economies where you have lowered supply and increased demand. There's only one way to differentiate who's going to get it, and it's through a pricing mechanism. And that's what we're seeing in the rental housing market at the moment. I do think it's quite interesting looking at the back of this report because also, you get some great quotes from the surveyors who've obviously been compiling the data. And let me just read you out some of the things that they've said. Instructions for house purchase survey reports has fallen dramatically, probably working at below 50% capacity. There's still a general shortage of houses on the market, helping to maintain prices in the area, but there's more evidence of asking prices being negotiated rather than readily accepted. So that's interesting that buyers are becoming a little bit more savvy. They're starting to realise that maybe the market is flattening out a little bit. The impact of those higher interest rates, perhaps the impact of fewer buyers as well, is allowing them to feel more confident about negotiating. And then here's another quote. Sales levels have surprisingly held firm. So this is a surveyor from a different area. But keeping chains together and getting them over the line is proving to be extremely challenging. Now, that's a very interesting comment, I feel, because I think as a property investor, one of the things that is in our favour, that we sometimes fail to sell to the seller, is that we don't have a chain. We're the end of the chain. Being an investor means that you generally don't have anything to sell in order to be reliable for buying that next property. You're the end of the chain. And usually you've got your finances worked out. Either you're using cash or bridging or a buy-to-let mortgage or some other form of capital. So that's a really good, strong position for you. And for many people who are selling houses today, they may be nervous that the chain could fall through. They may be nervous. Maybe it has already fallen through once or twice, particularly if it's longer than 3 people. Because chains are, traditionally 1 in 3 sales falls through before completion anyway. But apparently when there's 3 or more people in the chain, that number rises to 60% of chains falling apart before completion date. So as an investor, make sure that you have told the estate agent or told the vendor your position, because that may well make them want to accept your offer, albeit slightly lower than accepting the offer from somebody else who then has to rely on their own house being sold first. Another quote, vendors are not accepting the reduction in value demanded by buyers, thus creating a stalemate in the market, resulting in poor sales figures for the past 2 months with no ray of sunshine suggesting this will change anytime soon. Now, this is again an interesting quote from a different area about the movement in sales. So I think different areas are perhaps seeing slightly different movements in terms of sales figures and in terms of what the vendors are prepared to do. But I think overall what we can say is that it's a sticky time for house sales. If you've been looking at deals, if you've been looking at property, in some areas you'll find that there's still a lot of demand. There's a lot of competition for those properties, particularly I think where they offer some opportunity for refurbishment, improvement, adding value, and then resale, because we know there's a massive demand for those properties. But equally, I think if you're thinking of turning something into an HMO, the property sizes, the larger properties that work really well for larger HMOs are, there's quite a lot of competition for those at the moment, because lots of people are looking for those because they know there's a huge demand, and yet there isn't a lot of supply of stock of those kind of properties. Now, moving on slightly to another area which of course affects you if you're going to be doing a refurb, and it's material prices. And it's really interesting actually looking at the Builders Merchants Federation. Don't you think I have an exciting life? And the Construction Leadership's Product Availability Working Group. They've produced some figures, some statistics about materials in construction. Now, interestingly, the greatest price increases over the last 12 months were for doors and windows, particularly metal ones. So we're talking aluminium and steel here. They've gone up by 19%. So if you're thinking of buying a property that needs new doors and windows, you may want to try and buy something that doesn't need new doors and windows. And certainly I would suggest that aluminium is beautiful and it's a fantastic material if you really want to have the best quality. But it's probably a little bit overkill for most HMOs. UPVC is absolutely fine. However, you're still going to be paying an arm and a leg for that. So watch that. One of the things that I often say about refurbs is that you can end up doing a lot of work and paying a lot of money out for things which are invisible to the tenant. The tenant isn't necessarily going to say, oh yes, I'll definitely rent your HMO because you've got grade A UPVC windows. No, that's not the reason why tenants rent a property. Okay, they want it to be warm, they want it to be comfortable, they want the windows to be able to open and close, but they are not necessarily asking for the top most quality windows. So be careful, because you can end up spending on things which are not necessarily going to add comfort to the tenant's life, or certainly add necessarily any value to the property, or maybe even they won't necessarily increase the EPC rating. Not that that's quite so much of an issue at the moment anyway, because of the government's rollback on that one. Other things that have gone up, screws have gone up by 14%. So if you're thinking of doing a lot of joinery in your project, just be mindful of that. And ready-mix concrete, that's gone up by 14% as well. But interestingly, the price decreases are concrete reinforcing bars have gone down by 29%. Fabricated structural steel has gone down by 28%. So if you're going to be putting in RSJs, or if you're thinking of taking out chimney breasts in a property and you'll have to insert some steel bars, reinforced steel bars at the roofline level, which you'll probably have a structural engineer to do the assessments on and the calculations for, those steel bars have actually come down by nearly 30% in price. So it's a good time to be doing that. Imported sawn or planed wood has come down by 16%. So maybe you're seeing that if you're doing construction where you're creating new walls, full ceilings, partition walls, etc. Those particular elements of the refurb, those materials have come down fairly significantly in price. I do think we've still seen an increase in insulation material costs. Those seem to have skyrocketed, and plasterboard seems to have gone up. But interestingly, I think that there's clearly some supply chain issues here. This isn't just simply about raw materials going up in price because of inflation across the world. This is also about companies maybe going bust, companies going out of operation. They're not creating these materials anymore. And I mean, bricks, for example, there's been a huge reduction in the sale of bricks over the last year. And apparently by September 2023, it was 19% reduction for blocks and 32% decline in brick deliveries. In other words, bricks, which of course, where do we use bricks? Generally in new builds or maybe extensions, but mostly they're going to be used in new builds. We've seen a 30% reduction in demand for bricks. So if you're doing a new build or development, or you're doing an extension right now, it's a good time to buy bricks because they're probably going to be a lot cheaper. So these are key factors, of course, that affect refurbs and the cost of your refurb. Although we still have seen the cost of labour going up because of inflation, and the government has just announced the minimum wage is going to be going up as well in April. So that's going to have a knock-on effect on labour costs for anybody who's running a business. Now let's look at room rents. So this data is taken from Spare Room, and Spare Room, of course, is always lagging behind a little bit what's happening on a day-to-day basis, because they produce their reports normally a quarterly in arrears. So any data that I've got today that I'm telling you about, it won't be as of today, but it will be probably from up to maybe August of 2023. So if we looked at quarter three rents in 2023 versus quarter three rents in 2022, across the UK room rents rose by 16%. 16%! That's massive. The headline rate of inflation over that time was about 7.5%. It's actually come down since. But just think about that. If you are living in a property and maybe you move, or your landlord may well put up the rents. We've certainly had to put up our rents this year. They've risen by an average of 16%. And the average monthly room is now £721 per month. When I read that, my jaw dropped. It hit the floor. I remember just a few years ago, we would struggle to rent a house for £721 a month. Now, that is what an average room in the UK is priced at, which is incredible. And the average rent in both London and the UK as a whole is now at an all-time high. And some of the figures, let me give you some of the highlights. Northern Ireland, their prices have gone up by 19%. And the UK as a whole, 16%. Scotland has also gone up by 16%. The North East has gone up by 17%. And the lowest rising area is the South West, which has gone up by 11%. Actually, sorry, East Anglia, they've gone up by just 10%. However, these are still huge rises for people renting property, renting rooms. And another element that just wanted to point out for you from some of the facts that Spare Room has produced is the fact that demand for rooms is actually slowing down slightly at the moment. So we saw between 2022 and 2023 a huge spike in demand. And in fact, there were 8 people looking in London for every room that was available. And that, of course, includes every single room that's available on the Spare Room platform. That has dropped now, but it's still looking at about 4 people. So for every room that's available, there's 4 people looking. Now, some of those rooms will be single rooms, some of them will be very low quality rooms, some of them might be student rooms. So you can see here how there's still way more demand for rooms than there is supply. And in fact, the London market is actually slightly less pressured than the rest of the UK. The UK, there's about 4.2 people looking for rooms to the ones that are available. So you shouldn't have any problem filling your rooms is really the moral of the story. However, we are seeing rents starting to just tail back a little bit now. They're still gradually increasing, but they're not increasing. The room rates are not increasing at the same rate that they were over the last 18 months. And I think that's quite interesting because that feeds into my next slide, which is about employment and unemployment. And what's really fascinating is that just in the last few months, we've seen a real drop in employed men. So these are statistics from the Office for National Statistics, and there's various different kind of charts and figures that you can have a look at to see what's happening with employment. And because the majority of our tenants are guys, we have about 70-30 men versus women. And what I can see on this chart is that there are two concerning factors. One of them is what you call economically inactive men. So that has gone up. And then men who are looking for work, who are currently out of work, has also gone up. And the numbers of employed men has gone down. And you would expect those figures roughly to correlate. Economically inactive people are people who are out of work, but they're not actually looking for work. And they might have various reasons for not looking for work. A big reason is that a lot of them are students. 26% say that they're economically inactive because they're too sick. So they may have a long-term illness. They might be on sickness or disability benefits. 22% are looking after family. And 13% have taken early retirement. But nevertheless, what we're seeing in those figures, in those trends, is that number is growing. So there's more people who are not looking for work, but they are inactive. And they may be on some form of benefit, but they're not looking to get back into the employment sector. They're not actually looking for work. And what we're also seeing is longer term unemployed figures are also going up. So this is people who have been unemployed for 6 months or more. And we can see from the figures there that the numbers of people who've been unemployed for 12 months or more is going up. And people actually who've been unemployed for more than 12 months, those numbers are slightly coming down, which is interesting. So there's obviously some work going on by job centres and by the government to tackle long-term unemployment, which is a great thing. But still, these kind of statistics lend credence to the view that maybe the economy is slowing down slightly. We're starting to see more unemployment. We're obviously seeing the impact of higher interest rates into the economy. Is a recession just around the corner? Well, it'll be interesting to see that in 2024. That is certainly one of my predictions, is that we will see a recession in 2024. So I think that you can see from today's podcast, if you haven't seen it, you can hear it, that there are various different macroeconomic factors affecting the HMO market. We've talked about rental costs, employment, immigration, market supply and demand, cost of buying, which is, of course, interest rates and the inflationary pressure on costs of housing. We haven't discussed regulation. That's another one, which I may do a separate podcast on. But as you know, regulation, of course, has a big effect on the housing market as a whole. And we regularly are being told that landlords are leaving the property rental sector in their droves because of the Section 24 impact, particularly when you have an inflationary environment and the income tax thresholds have not changed. You have fiscal drag. And what that means is that suddenly you become a higher rate taxpayer on the back of being a landlord and having a property in the private rental sector, and you're getting no benefit from now having that property because you can only claim your 20% mortgage interest charge, and you've still got another 80% to pay. And I suspect many landlords are now looking at their portfolio and saying it just isn't worth it. So people are leaving the private rental sector, it's pushing up demand, and of course this has a massive increase on rents. So what do I think is going to happen in 2024? So I think there's a few things. Number one, I think we're probably going to see a recession, and we're going to see probably even more demand for social housing and the lower cost end of HMOs. You may be dealing with tenants who are on universal credit or might lose their job and then go on to universal credit. So have a plan, have a system, think about your policy. What would you do if that happened to you? How are you going to respond? When you're buying a property, remember that although there is still competition for those bigger properties to turn into HMOs, there may well be fewer potential buyers than you think. So there's no harm in putting in a bit of a cheeky offer, but at the same time, sell your strengths. Let the vendor know that you are in a strong position to buy and that you will complete on the sale. So reducing their fear of working with you as an investor. And in fact, I've only recently seen this happen with one of my mentees who bought a property that is a brilliant property for an HMO. It needs a bit of a light refurb. They're going to put some en suites in. It's going to be a fabulous property. It's in a great location, a good size. And the vendors chose my couple over other people because of their ability to complete and having all their finance in place. So buyers want certainty. And if you can provide that evidence to show that you will be that certain person who will complete on the deal, then you're in a much stronger position than somebody else who maybe already has a house to sell. Another area to think about is, given the rise in immigration, which is not slowing down anytime soon, and I'm not going to talk about the Rwanda bill, but that's just a sideshow, really, because it's legal immigration that is really where the big numbers come in. But thinking about languages and cultures and help for tenants. How do you help your tenants when they move into your HMO? What information and advice are you providing them? Do you provide any translation services? Are you able to point them in the direction of areas or services in your area that they can access? Because these things can feel very, you can feel very sort of like a foreigner when you arrive in the UK, and maybe you've got a job, but things are still kind of a bit uncertain. And I think it's a great privilege actually to be able to host and to be able to offer rooms and accommodation for people, but generally that works best when you also kind of educate them about how to live in the HMO, house rules, and where they can get support, information and advice. I always say we are not the second social service. We're not here to provide social services, but as a letting agent, as an HMO landlord, I actually do believe that there is some moral duty to support and help people when they're new. And they will probably repay that many times over by staying and paying, which is, of course, the bottom line. I would also recommend that in this rather more uncertain economic outlook, you might want to start thinking about getting guarantors for your tenants if you don't already, and getting larger deposits, because I think in some sectors of the economy, the jobs market is going to be a little bit more tentative, a bit more frail, and people who are working maybe in the gig economy or working on shorter term contracts that might not get them renewed, they may be people who find it harder to pay their rent. So make sure that you have done everything you need to do to certify that that tenant is a good, robust tenant for your letting. Make sure that you've done your credit checks on them, but also get some backup in terms of a guarantor or some form of rent guarantor and a larger deposit. Offer, 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 deal, deal, deal. What do I mean by that? What I mean is there are many opportunities out there, and despite the fact that housing stock levels are reducing, where somebody needs to sell, and we know the reasons why people need to sell, there are opportunities. So don't look at this and think, I'll wait to invest. No. This is a great time to invest. We've had some of our best deals actually in December, and this is a time when many people really want the psychological deadline of Christmas to be met with also the clarification that their house is going to sell. So don't use this information from today's podcast as a reason to not invest. I think this is a perfect time to invest. And remember to sell your strengths as a buyer. So you've got no chain, you're an investor, you're a business, so there's no sense that you're going to be emotional about this and you might pull out for emotional reasons, which is actually one reason why lots of people do pull out of sales. They get buyer's remorse. You're ready on paper, you've got your mortgage ready, you've got your deposit ready, you're not having to sell a property. Those elements that we spoke about, make sure that you highlight those to the vendor. And get out there, make viewings, book viewings, go and see property. There's nothing better when you're starting off in HMOs than doing some property viewings. bear in mind that 2024 could be a little bit of a volatile year financially. However, we've weathered the storm in the past, haven't we? We've had financially volatile years over the last few years, and I think 2024 is going to be no exception. Another prediction I would make is that we're actually going to see a reduction in interest rates, and we're going to see mortgage rates come down. When we look at US bond yields, they're reducing quite quickly at the moment. Now, the US, of course, the American dollar is the world reserve currency, so it does have an impact on our currency as well. And while we haven't seen interest rates come down, I think we will possibly see that happen next year. I suspect the Fed is going to reduce their interest rates because of bond yields, and I think that the UK will follow suit. So when it comes to refinancing next year, you might find you can get some pretty good deals. So don't hang around. Don't say to yourself, well, this isn't a great time, or things are uncertain. I think all the factors are that if you can adapt and respond to this market, there are going to be some real opportunities here. We've seen the price of materials rather fluctuate as well. So be careful about the refurb that you do. You don't necessarily want to go in and do a massive, big, expensive refurb that's going to cost you an arm and a leg that you won't necessarily be able to recoup at the end of the process. So make sure that your refurbs are in line with the result that you're looking to get. And if you can gauge that carefully and gauge that well, you'll find that you put just enough money in to add value to the property, to increase its value, to create a profitable HMO, which you can then value up at the end, pull your money out and go again, and make a good cash flow from that month in, month out. That's what I try and do with all of my HMOs. That's what I teach my mentees to do. And that's what I think you should be doing too. I'm going to still do a couple of other podcasts before the end of the year. This is not the last podcast for 2023, but I just want to wish you a very, very happy Christmas anyway, because you may well be busy to listen to my next one. But please catch up with the HMO Success podcast in 2024. And if I don't speak to you, hear from you, see you before then, do have a very peaceful Christmas and New Year. But there will be another episode coming out before the end of the year, before Christmas, and then just before New Year, before we launch into 2024, which I think is going to be a very exciting year. So thank you very, very much for listening, and I will speak to you soon. Thank you for listening to the HMO Success podcast. If you'd like to know more about how you can create a profitable HMO business, please visit our website, hmosuccess.co.uk, to find out more. We have plenty of free tools and information for you there, and also on our Facebook group, The Ultimate HMO Success System. We look forward to connecting with you very soon. Thanks for listening.